All right, there you have it.
Okay, there you have it. That, of course, was Nayantara Rai in conversation with a whole host of industry experts right there at the CI post-budget 2019, understanding the verdict, especially from a market standpoint, on what exactly this budget has been able to dole out. And boy, has it been able to dole out a whole host of stops, from the farmer class to the middle income. In fact, Mr. P. Chidambaram has already called this not a vote on account, but an account for votes. But what exactly is the tax implication? How exactly has the middle income, especially and particularly benefited from the interim budget of 2019? To discuss that and the wide objective of both direct as well as indirect taxation, well, more so from a direct tax perspective, we have with us some very special guests, and we're joined in by Gautam, Mehra, the leader of tax and regulatory at PwC, Bilal, the managing partner for Catalyst Advisors, and from New Delhi, Pranav, Sayta, transaction tax leader with Ernst & Young India. Good evening to all of you gentlemen. Thanks so much for joining in. Mr. Mehra, I'd like to go across to you first. Middle income. I think the middle class, of India has been given the most amount of SOPs. And I think first up, I want to throw a very pinpointed question at you, because this is the kind of queries we've been getting in, via Twitter, via Facebook, etc. That very seemingly, at least for the not so updated citizens, it may be a little confusing with respect to that rebate bit on the 5 lakh rupees bit. One thing's clear, it's not an exemption. The exemption limit hasn't been increased. So if you could just start off by explaining that provision to our viewers, because we know for a fact that that's that key contentious point. Because at the end of the day, everyone wants to know, hey, how much tax am I going to have to pay?
Yeah, so very valid point, and there was some confusion around this. You're absolutely right. The exemption limit still stays at 5 lakhs, but an individual who's earning salary income or other income up to 5 lakhs will actually land up.
Hi everyone and welcome. Well, this time around the interim finance minister Piyush Goyal did give some relief to the income taxpayers as they proposed to offer a tax rebate for individuals earning up to 5 lakh rupees. Well, lots more has been doled out and we'll be discussing that and lots more. We have a panel joining in right now. We have Mr. Pranav Sayta, transaction tax leader EY India, Gautam Mehra, leader tax regulatory at PwC, as well as Mr. Bilal, managing partner at Catalyst Advisors. Thank you so much, gentlemen, for taking time out and being with us. I'm going to start off with you then, Mr. Mehra. There was a little bit of confusion as well, and there were lots of fingers being crossed and lots of expectations riding high with respect to the income tax slab. Offering that tax rebate for individuals earning up to 5 lakhs. So essentially the rebate under 87A of the Income Tax Act, that has been enhanced to 12,500 from 2,500 earlier. Can you just firstly tell us how much you're rating this budget from an income tax standpoint and what you make of this point?
No, thanks so much. I think from an income tax standpoint, one has to obviously rate basis the expectations.
Right.
And the expectations what not too much will be done on the Income Tax Act 1961, given that this was a pre-election stuff. So overall, I would rate it good for the simple reason that while there is a bit of populism in this, really, but that has been balanced well with prudence, given that we have still landed up at a 3.4% budget deficit. Coming to your specific question on 87A, yes, there was confusion that, is this really going to save money for taxpayers? The answer is yes. So a taxpayer who has income, taxable income of up to 5 lakhs, will land up having on paper a tax liability of 12,500. There is the rebate of 12,500 which will kick in, and therefore net tax payable by such a taxpayer is 0. That was not the position earlier. This same section had a limit of 3.5 lakhs and a rebate of 2,500. And therefore somebody earning 5 lakhs in this current year would still have to pay the tax of 12,500. That is not payable from the next year. If I just top it up a bit, you look at a salaried employee, if he's earning 5,50,000, given that the standard deduction has been raised from 40 to 50,000, 5,50,000, 50,000 standard deduction, you come to 5 lakhs, 12,500 tax rebate, 0 tax.
Okay.
That's where it stands.
Okay, so for example, I'll just, along with you adding, for example, let's say if I'm earning 9 lakh rupees, what would be my position?
Yeah, so I think before we get to that, Mubina, your question, let me just explain one more thing. So as Gautam rightly explained, at 5 lakhs or 5,50,000 for a salaried taxpayer, you will not pay tax. But one thing which is important is that you will still have to file a return. And that is important because the initial impression I got when the FM was talking was that you will not have to file a return. But given that it's a rebate you have to compute it and then reduce it. And that is significant because you have totally about 6.5 crore people filing returns. What about 4.5 to 5 crores taxpayers? This is 3 crores out of that.
Okay.
So if the return was not to be filed, virtually half the people would go
Out
away.
of the tax,
in a sense, frankly, that would help in terms of simplifying paperwork and administration. But I think the fear of the government is that if you reduce that or if you do away with that, you will lose sight of them, so to speak. So that's one point. Coming to the point you made, if it is 7 lakhs, and let's say you are a salaried taxpayer, so you get 50,000 as reduction because of standard deduction, and on 6.5 lakhs you will pay, unless of course you are going to pay 1,50,000 for example as PPF, in which case you are again back to 5 and nil. But if it is 6,50,000, then you will pay 5% of the difference between 5 lakhs and 6,50,000, which is about 7,500.
Okay. Let's also get in a view from...
Sorry, it's 7,500 plus you will still pay the difference between 2.5 and 5.
Between the first slab, right.
So really clearing the air. We're starting off with that. Mr. Sayta as well is joining in then from New Delhi. Thank you so much for taking time out. So, you know, let's talk a little bit about what has been doled out from an income tax point of view, because expectations were that there would be some relief coming in for the lower and the middle income groups. With this move being announced, can you highlight for us how you would, you know, stack up the budget on a rating of 1 to 10 in terms of an income tax point of view? You know, you did have a point being brought up by Mr. Mehra saying that we were not going in with very high expectations in the first place. So from that point of view, can you highlight what exactly the rating is and give us a sense as to now with this rebate under Section 87A of the Income Tax Act being enhanced to 12,500, how you're reading into this move and who it is beneficial for?
From a rating standpoint, maybe 8 or 9, which is not an easy rating to give typically. And the reason for that is very clear. I mean, the expectation from this interim budget was pretty muted, because it is at the end of the day an interim budget, and therefore all the steps that he has taken I think are great moves. And I find it very difficult to find any move in this budget from a direct tax standpoint which is worth criticism or severely negative from a taxpayer standpoint. One is, of course, he's increased the standard deduction. He's brought in for housing quite a lot of relief. 2 self-occupied houses not taxable. Capital gain rollover for the second house as well, very clear, up to 2 crores. And apart from that, he's given this relief of from 2.5 lakhs to 5 lakhs, 0 tax if a taxpayer falls in an income below 5 lakhs. Let's be clear, therefore, if a taxpayer's final taxable income is above 5 lakhs, then he doesn't gain much from this particular amendment. But if his income is below 5 lakhs, then virtually he ends up paying no tax at all, and therefore he gets a relief of 12,500. Even if you say up to last year there was 2,500 available, it's still a tax relief of 10,000 rupees. And typically we have seen governments and finance ministers doing trivial changes to the threshold limit, which are incremental. This one is a real decent change, because we see a quantum jump straight from 2.5 to 5 lakhs, or even if you say 2,500 was a tax saving allowed even till last year, it goes up to 12,500, which I think is a quantum jump and a real decent increase in the threshold limit when a person starts paying tax. And therefore, I think this is a good move, especially coming at a time when it is an interim budget. It was long overdue because inflation has eroded the value of the rupee, and therefore a big change in the threshold limit was really called for. I think this is a good move. Yes, apart from this, I feel there are several other steps which makes me give a good rating to this budget. The intention is very clear. He has said that within 2 years, we will have a far more transparent, corruption-free tax compliance, where there will be no jurisdictional e-assessments.
Right. Pranav, Satya, very valid points you're making over there. Clearly the idea was to put more money in the hands of the middle class, especially when you look at those new entrants in the jobs, giving consumption a leg up. A lot has been said about it. Piyush Goyal in the press conference also saying, wait for more changes if you vote the government back to power when it comes to direct tax code. But, you know, like you all been pointing out, huge game changers when you look at the real estate market as well. Gautam, Mehra, let me come to you on this one first. look at the kind of leg up the government is trying to give to the real estate market. One of the big problems that has been faced has to do with that capital gains tax, especially at the time of inheritance. How have you understood this entire provision that if you sell a property, the changes in the long-term capital gains, the exemption limit that has been increased now to 2 crores for once in a lifetime? How is this going to rewrite the rules of the game, if at all? We are being told and we are being made to understand that this is a big relief that is coming in.
Yeah, so it's a very targeted benefit, just like the one for the rebate. As in the case of the rebate, that rebate will not be applicable to a person earning more than 5 lakhs. Similarly, in terms of this capital rollover, earlier a person sold a property, could save capital gains tax so long as he rolled over and bought one residential house. The exemption, or if I'll say the broadening of this exemption to 2 houses, is restricted only where the capital gains earned is up to 2 crores. So if it is, a residential apartment in a more expensive locality and it is inherited property, the capital gains could land up being higher than that, and that will not be available for the exemption. You will still get the exemption of 1 house to 1 house, but not 1 house to 2 houses. So clearly, as you said, if I were to look at the 8 sections that have been amended in the Income Tax Act in this budget, it's either the 2 or 3 sections which relate to the lower salaried, or if I'll say the lower tax rate of taxpayers. All of the others impact the real estate sector. And I would think that's a positive move, not only given where the sector is, but given that the sector is also one of the largest employers in this country.
Ketan Tilal, if I could come to you now, if you could also go a little more into this capital gains and 2 crore exemption. This is a big problem that has been faced, especially at the time of inheritance. And after that, I want to also get your views about this major clarification of the notional rent income tax going out of the way. That's another way that we've seen cases of scrutiny, tax terrorism. But first, if you could tell me how inheritance could change with this in capital gains. And also, let's not forget, investments in real estate is still the preferred retirement tool. You buy a house, you put it on rent, and that's what you live off once you retire. How is this going to change all of that and make life easier?
So, Nayantara, the issue really is that I don't think it has anything to do with the inheritance, because the seller is, let's say, Mr. X, who has 2 sons. Let's say he's selling a house in order to make sure that he buys 2 and give it, and make sure that his 2 sons stay in 2 different houses. And if he passes away, if at all there is an inheritance tax, and at that time it's different. Today we don't have inheritance tax or estate duty anyway. But in terms of the capital gain rollover, as opposed to 1 house, he will get an exemption for 2 houses. And as Gautam rightly pointed out, it's not a sort of across the board thing, but it is certainly a targeted relief. That's number 1. Number 2, that if you have 2 houses, then the only 1 house you would get what we call an SOP, self-occupied property relief. My point really is that on the second house where notional income was being taxed, first of all, it is a concept of not adhering to the basic principle of real income, because tax should be on income. So your notional income is not really your income in the first place. So I'm glad they have done it. Insofar as other changes in real estate are concerned, some of them are from the perspective of the developers. So for example, if a developer has unsold stock, he was entitled to 1 year non-taxability of deemed income in relation to that unsold stock. It has now been increased to 2 years. It will give some relief certainly to the developers, but on the other hand, it may encourage him to hoard the property rather than to reduce the price and sell it. And then in relation to affordable housing, there was a requirement of approval for exemption from the developer side up to 31st March 19 for the project to kick off. That has been extended to 31st March 20. So I think all in all, it's a larger package for the real estate sector, which is stressed. But as one of the earlier panelists said, I think a big daddy item in real estate is GST for under construction properties. That I believe the GST Council is looking into it, and addressing that I think is also very important for what is really a very, very stressed sector.
In fact, Ketan Dalal, let us blow our trumpet a little bit. We at ET Now had broken the story of how this government wants to drastically reduce that GST rate on under construction properties. It's either going to be 5% with no input tax credit, or it could even be 8%. But, I want to come to Pranav on a point, that you just raised. He's saying it's only going to help the developer. Would I be right to believe that that is not the case? I know we somehow frown upon people who dabble in real estate as an investment, or we call them speculators, but there are people out there, HNIs out there, folks out there who own more than one property. And if that is not on rent, isn't their life going to become easier, especially when it comes to tax, as far as that notional rent income tax being done away with? Because once again, that was another way you were seeing a lot of cases come under scrutiny, because the taxman believed this should be the notional rent, irrespective of the market realities.
Oh, absolutely. I couldn't agree with you more here. For various reasons, I feel this is the right step. One, there is no real income being earned by the taxpayer. And to tax a person without any income being earned means he is really paying out of his pocket without any income from which he can pay that tax. So it's completely ridiculous, absurd, and I think it was a tax that ought to have gone anyways. Maybe even for more properties, but 2 properties is something that not only the super rich own today, because there are several people who have been born and brought up at one place, have their base at one place, go for a job to the other place, or have parents to support for whom a separate house is required, or children who are getting educated and so on. So today 2 houses is not something that only super rich people own, and therefore this is indeed a great step, and it is in principle correct, because there cannot be a tax without an actual income being earned. Apart from that, the way I look at it is the fact that all the compliance, as you rightly said also, and all the pain in trying to explain what the fair income or the fair rent for that self-occupied non-rent house should be taxed on, itself was an unnecessary stress and burden both on the tax administration and the taxpayer, and it causes unnecessary conflict and controversy, which easily has been avoided by this step. And I think most taxpayers who would probably own more than one house would fall in this category of owning 2 houses, and therefore would be covered now by the relief. There would be probably much fewer taxpayers, I don't have the data right now, who own more than 1 houses, but also own more than 2, meaning own 3, 4 or more houses. Those would really be the very rich probably, and who would probably have far more support with them to also explain their notional rental incomes and so on. So definitely a step in the right direction and the right thing to do. I would strongly endorse this. Of course, they could have gone even further, but I think under the circumstances, this indeed is a very welcome step.
And Gautam, I'm going to make this the last question about real estate before I move on to other aspects of announcement of taxation. I want you to come in there. The feedback we've got from viewers that they want to understand is that, of course, you're doing away with this notional rental income tax that used to exist. That's a big ease that is coming in. But they just want a little bit of clarification that if you own a property and one is vacant, that means they don't have to pay any tax at all as of now on that vacant property, or is that only up to 2 years? I'm talking about those who own more properties, not the developers.
Yeah, so there was the current act says that for only one self-occupied property is exempt from this notional tax. If you own more than one self-occupied property and if it is vacant, you will end up paying some notional tax on the second one. So to that extent, this budget has given the relief, saying for the second flat as well, you will not land up paying the notional tax. So that is a real positive. One more small thing which I'd like to add, which got missed out, but which have impacted a lot of people in this country, would be the TDS exemption, which has gone up from 10,000 to 40,000 on interest received from fixed deposits. We'd be having hordes of investors who will have income of maybe 1 lakh, 2 lakhs, not filing tax returns, but the interest or TDS probably getting deducted. And that would have been a cost for them, because then going and filing claims for refunds would be very cumbersome and bothersome unless the banks accept those certificates which are given. So this is also another very big welcome move, and I think it should help that targeted segment of society very much.
Ketan Dalal, you heard Piyush Goyal talking about how they accept the returns as they are filed, more than 99%. The problem is that when you even look at that very, very tiny, minuscule ones, those are the really big cases that hog the limelight and the headlines. But having said that, he's also said in a very bold move and what the government wants to move towards, and that is of refunds being made available within 24 hours, anonymous tax assessments taking place. What did you make of that? How far away do you think we really are from that? Would you believe and are you convinced that we're really 2 years away from that, where I could get my tax refund within 24 hours?
So I think, Nayantara, the process of e-assessments have already started. Currently, it is not anonymous on both sides, but it has started. If you ask me whether it is working well on the ground, well, it's a little early to say. Let me put it this way, it is directionally correct. There are a lot of transitional problems. For example, today also you can upload, and you're supposed to upload for e-assessments the information on a portal. But you have a problem of not more than 5 MB is getting uploaded, not more than 10 files are getting uploaded. You have several problems like that which are more relevant to the larger taxpayer. But if you ask me directionally, anything going digital, and anything becoming a sort of faceless interface, if you pardon the contradiction, that faceless thing I think will be very, very useful. The only issue that I'm worried about is that today also, in a faceless, the central processing center at Bangalore, for example, if there is an adjustment made, you need some kind of an intervention, some kind of a system which is not today working very well, to address any error arising out of that. But if you ask me directionally, this e-assessment has the ability, has the potential to change the face of government interface, and I think will significantly bring down harassment, corruption, and indeed the spending of time by the assessee on tax matters. For the 1% or 0.5%, also I think a lot of things need to be done to facilitate interaction, because remember that 0.5% brings in more than 55 to 60% of total tax revenue.
I know, okay, I know we have to wrap up, and I'm going to go across, I hand it back to Avant Devash before I sign off here from the CI headquarters. Before I do that, I will just ask my final question to Pane Satya, just to clarify a lot that we've been reading about. There are no changes in tax slabs. There was confusion that would those who are earning more than 5 lakh rupees annually get to enjoy that tax rebate, a tax deduction that Piyush Goyal talked about in his budget. If you go through the fine print, it seems to be different. So if you don't look at the change in tax slabs, how are you reading this fine print? What exactly is it? Let's say hypothetically I make 12 lakh rupees a year. How much is my deduction? How much is my tax rebate?
Yeah, very clearly, if you are earning 12 lakhs a year, nothing changes for you. This particular amendment or proposed amendment is not going to benefit you then. It's very clear that this amendment or proposed amendment will benefit a taxpayer whose final taxable income is 5 lakhs or less only. Only those taxpayers benefit. A taxpayer whose final taxable income is above 5 lakhs doesn't really benefit from it. Effectively, therefore, if a taxpayer has income of 7 lakhs, 50,000 standard deduction, 1.5 lakh invested in, say, PPF, etc., as was said earlier, bring down the final taxable income to 5 lakh, you get the full benefit of this rebate. And therefore, your tax payable becomes zero. But if your final taxable income is above 5 lakhs, then that's not when you can get the benefit of this proposed amendment, which brings a tax benefit of approximately 10,000 rupees, depending upon which slab you fall in, how much below 5 lakhs you fall in. But it is available only to a taxpayer whose final taxable income is up to 5 lakhs, meaning 5 lakhs or below, not to taxpayers whose income is above 5 lakhs.
Let her. Right. That's the take coming in. In fact, let's just continue that discussion then with our experts. And Mr. Dalal, just wanted to take that forward, that question, basically in terms of how you're looking at this overall move with respect to what the finance minister did in the budget last year, reintroducing that standard deduction of 40,000 rupees in lieu of the medical reimbursement and the transport allowance. Now with the increase in the basic exemption limit, do you think that all of this is going to come and benefit all of the income taxpayers?
If you are a salaried taxpayer, Avan, yes, because the standard deduction, as you know, applies only to salaried income taxpayers. So if you think of an increase of 40,000 to 50,000 on the 10,000 rupees, depending on the rate of tax in which you are, so which will be either 5, 10 or 30, you will benefit to that extent for sure. So, but it's not a very significant move, and over a period of years, I think what has not been realized is that the salaried taxpayer has generally got the short end of the stick because the standard deduction really is intended to compensate him for some of the expenses that he incurs in the course of his employment, and which may not really be in really a taxable income in the first place. So 40 to 50 is good, but it's not a very significant move. It will help some taxpayers to some extent depending on the tax rate.